fact, let's get to one such conversation immediately. As promised, we have the management of Zen Technologies joining in. Mr. Ashok Atluri, Chairman and Managing Director of the company, is with us. And it's been a really good quarter and a pretty decent year for Zen. I'm just recapping the numbers. In the fourth quarter, revenue is up 130%. The margin has zoomed up to 42.5%. And the profits, they've soared from about 35 crores in the Q4 of last year. The profit now is at 101 crores. And even for the year as a whole, 121% top line growth and profits, also moving up substantially. Congratulations on a good year and a good quarter, Mr. Atluri. Now, let's talk about this. Exactly what Parikshit was saying, that I guess the procurement timelines are getting crunched and there is major ordering that's going to happen. Talk to us about both your anti-drone part of the business as well as the flight simulators. Anti-drone, I don't know if some of your equipment was already used in the last 2 weeks or not. But basically, what kind of growth can we look at? Some numbers will help. We all know the opportunity and the environment around us.
So, our anti-drone systems were used in the operation, and, we are very, very happy that, all the investment, self-funded R&D paid off for us, and we have got very good feedback from the armed forces, and we as Zenith, we feel very proud that this happened. And with respect to the, the orders that we may expect, we, as the industry, whole of the industry has been discussing with the armed forces. We have also been very much engaged with them. And we do expect, some fast action to happen in this regard. But the quantum and the time is unknown at this point in time. And, we currently have an order book position of about 691 crores. But again, we are expecting a few more orders in this and the next quarter. I think they're simulator related, but again, they are also reasonably large. And so, yes, the order book orders seem very, very likely in the short term, yes.
On drones, let me start with that part of the business. It's a smaller part of your business right now. I think it's about 25%. That's the split. Yeah, 27%, I believe, of your order book.
Yeah,
on drones, yeah, please continue.
Yeah, on the total, almost it was, the simulators were a little more than for the year last year, the execution. But these keep moving in as we keep getting the orders. So, they're very, very, but as of now, we're almost like, 50-50 in both the segments.
So I'm just trying to understand in terms of fresh procurement, I'm talking only about the anti-drone part of the business. Can you tell us how many, orders, what are the conversations in terms of quantum? What's the pipeline looking like?
So this is the ongoing conversation, and we are definitely not aware what will be the size of the thing. But the feeling is that it could be very large, and to exactly pinpoint and tell that this is the figure is very difficult at this point in time.
Mr. Atluri, 2 questions. One, would you want to give us a guidance? Morning, Prashant here. Guidance for F5. I think your long-stated guidance has been, it should be about 2,000 crores in top line by F527. That you maintain that?
So yeah, what we have said is that, on a cumulative basis, we should be going at a CAGR of 50%. And for the financial year, this financial year, next, and then up to FY 26, 27, 28, we should be growing at that pace. That would be a little more than 6,000 crores of cumulative turnover. We still stick by that. And but this year, we feel that it may be a bit muted because of the delay in orders. But I think things are improving very fast as we speak.
Mr. Atluri, you said 6,000 because you're at
cumulative over the next 3 years. Yeah, 6,000 crores. Yeah.
So you're at 900 odd crores now.
That's right, yeah.
about actually closer to 1,000 crores. You're saying this number should move up to 6,000 crores cumulative
over 3 years.
Yeah, over 3 years. It's 900, 1,350, and 2,000, and then 3,000. Yeah, that's how we are trying to do that with a 50% cumulative growth rate.
So for this year, we are working with roughly around a 50% growth at least, right? So
that's what I'm saying. It's cumulatively it will be there, but this year is going to be a bit muted, Nigel. Yeah.
Got it. All right. But the cumulative number, that is on an average, if I take an average for the next 3 fiscals, it should be roughly around 2,000 crores. Because 1 year you could do 3,000 crores, another year you could do around 1,500 crores. Are we getting that point correct?
Yeah, it will be
the summation of the revenue. Got it.
Overall, it should be growing only, yeah, but I think that's what the whole point is, yeah.
All right. Got it. A quick question then. Last time we chatted, you said you're expecting good amount of order inflows, and your order book for the kind of growth you're looking at, well, it's a little bit subdued, at least as of now. But you said that there is good amount of inquiries, and in the pipeline as well, there could be some orders that will be executed. For the year, what kind of order inflow are you looking at? And for the first half of the year, I think you were hinting at roughly around 500 crores of order inflow. Is that on the cards?
Yeah, so we were saying about 800 crores in the first half of the year, and I think we still stick to that. I think that 800 crores is still very visible to us. We should be getting those orders, but with the new situation, I think the order book position will be substantially higher.
Okay, all right. And Mr. Atluri, at least for the year, you're saying it'll be a little softish here. But year and now is what the market's interested in, right? So for the year, you want to give us a broad range. What kind of... we take that on board. FY26 could be a little bit subdued in terms of execution. And then 27 and 28 will be better. But you want to give us a rough range?
So Nigel, the thing is that once we get the order, things are under our control and we are able to predict. That's how the order book position was. But the orders have to be given by the government. Unless we get the order in hand, the total execution for the year will be very difficult for me to...
All right, Mr. Atluri, very quickly, this year the numbers look good, but the OCF is still negative, operating cash flows. Next year, you'll fix the problem? Will we have a positive number?
Yeah, it will definitely be a positive number, but this is the cashes are coming because the government, there is a little delay.
Yeah, receivables have moved up.
Yeah, absolutely, yes, yeah. Yeah, they'll get corrected. That's just a matter of time.
So a positive OCF number we look forward to in FY26.
Right.
Any new acquisitions? You've done a few smaller acquisitions in your space. Anything else we should expect, Mr. Atluri?
We are on the lookout, and we expect that something may happen during the year, but not immediately. But during the year, the discussions are going on with a couple of companies. But till they happen, they don't happen, kind of thing. So we'll just hold it till we actually finish the acquisition.
Just one thing I want to clarify, what Surabhi began with, when we talk about replenishments in your business, on the anti-drone side, I mean, there's no replenishment in that sense, right? Or is there? Because those would be on the munition side, drones carrying munitions, etc. Am I correct?
Yeah, the thing is that first we have to acquire. The acquisition has to be completed, to fulfill the requirement. That itself isn't completed. Once it is completed, then for companies like Zen Technologies, we get annual maintenance contract for about 8 to 9 years after the warranty period, and then after 10 years life cycle is over, they replenish the equipment again.
Okay, all right, got that. Thank you very much for joining us. Good speaking with you, and good luck to you and your team as you continue to execute. So, I mean, things coming in from Zen. Stock's done very, very well over the last 5-6 days. Actually was one of the best performing names last week in a sector which, of course, has really done very well.